welcome to the Deep Dive. Today we're going to take a closer look at Palantir Technologies, ticker PLTR. Now, this is a name that's been making some serious waves. You've probably seen its meteoric rise this year, right?
Yep.
Double-digit growth, even when, frankly, a lot of other tech stocks were just struggling. Valuations gone through the roof. But here's the really interesting bit from the sources you shared. Some Wall Street forecasts. They actually suggest Palantir is set for like a nearly 30% drop. So for our deep dive today, is that it? Is that the whole story, or is there something more going on here?
That's exactly right. And, discussions around these really high valuations, future predictions, they're always complex, especially for a company like Palantir that tends to generate pretty strong opinions either way. So this deep dive is a great chance to really dig into what's genuinely driving Palantir's performance and its long-term outlook. We're going to explore why, based on the material you gave me, Palantir stock isn't necessarily, heading for rough seas in the next few months, despite those forecasts.
Okay, let's unpack that. Let's start at the foundation. Palantir has spent, more than 2 decades really honing its expertise, developing this software platform that helps customers make sense of their data, optimize it. They've clearly been building something substantial for a long time. So what specifically changed? What was the catalyst, the sort of pivotal shift that suddenly supercharged them, especially in the last year or so, put them on everyone's radar like this?
Well, the thing that truly changed, and it's highlighted right there in your sources, was the major integration of artificial intelligence, which led directly to Palantir's artificial intelligence platform, or AIP.
AIP, right.
Yeah. And this platform has undeniably grabbed the attention of, both government and commercial clients. We're seeing some really powerful examples of AIP in action, too, across all sorts of sectors. You've got governments using it for faster, better decisions in critical military missions. Or think about, say, a hospital managing patient flow, beds, staff, supplies. Especially on a chaotic night. It's a huge logistical challenge. Exactly. AIP can step in there and kind of optimize all those moving parts, save time, maybe even save lives. And then you have major companies, like Wendy's is an example given, using AIP to improve their whole supply chain management.
From forecasting demand to deliveries.
Right. Predicting demand, optimizing routes, everything. It's not just about, abstract data. It's about real-world impact. High-stakes stuff.
That's some serious versatility.
Yeah.
Okay, so beyond the tech, the real proof is always in the revenue, right? Especially in this market. For a long time, we knew government contracts were Palantir's bread and butter. But the numbers from your sources show something really interesting happening lately. The commercial business has picked up some major momentum, and it seems like it's directly thanks to AIP. The growth figures you pulled are pretty striking. Latest quarter, U.S. government revenue up 45%.
Solid. Very solid.
But U.S. commercial revenue, it jumped a staggering 71%.
71%, yeah.
And that follows the previous quarter, where government was also up 45%, and commercial was up, 64%?
That's right, 64. So you see this accelerating trend on the commercial side.
These aren't small bumps.
Yeah.
I mean, that kind of consistent, really powerful growth, that's clearly what's fueled the stock performance. Helped Palantir stock rise, 340% last year?
An incredible run.
And then extend those gains by climbing more than 80% this year already. Now, for a lot of people, that kind of rise that fast, it triggers alarm bells. Is it sustainable? Is it just, going to crash?
It's a fair question. Definitely one investors are asking.
Which brings us right to the elephant in the room, the valuation. Palantir shares are, let's face it, expensive. We're talking trading for 237 times forward earnings estimates. That number just jumps off the page. So what does this mean? Based on your reading, is this a huge red flag? Does it mean that 30% drop is basically inevitable?
Well, what's fascinating here, and this is a key point in your sources, is that being pricey, it isn't actually new for Palantir. The stock's been seen as expensive for years now, and that hasn't really stopped its momentum, has it?
Huh?
So the kind of hidden logic, maybe, is that some investors, especially long-term growth investors, they aren't always prioritizing that current valuation metric. Instead, they're looking, maybe a few years down the road at the potential. Certain tech investors, particularly, tend to focus more on the innovation itself, how that drives growth over time, rather than just the immediate PE ratio.
That definitely shifts the perspective. Okay, but even with that long-term view, how strong is the actual demand for AIP right now? Especially with all the broader economic uncertainty we keep hearing about. Are companies still actually signing up, investing in this kind of tech? Or is the slowdown hurting them?
The sources seem pretty clear on this, even during this period of general uncertainty that's affected a lot of stocks. Palantir kept seeing high demand for AIP. Yeah, which is a pretty strong signal, suggesting that maybe broader economic pressure isn't hurting this company in the same way it might hurt others. And the feeling, based on the material, is that this demand should stay strong unless, the whole economic picture changes dramatically. And if you connect that to the bigger picture, the entire AI market, I mean, the forecasts are just huge. It's expected to grow at a compound annual growth rate, so average growth each year in the double digits.
Double digits, wow.
And set to surpass, get this, $2 trillion in the coming year.
$2 trillion, that's enormous.
It really is. And this massive trend, combined with the demand Palantir is seeing specifically, it strongly suggests companies are just really eager to apply AI. And Palantir's AIP, well, it's designed to make that whole process easier, more effective, generate those game-changing results they're looking for.
Okay, $2 trillion market potential is definitely something to think about. And there was another key number our sources highlighted, Palantir's Rule of 40 score. It came in at 83%, which sounds impressive. But for listeners maybe less familiar with software metrics, can you quickly break down why that number matters?
Sure. Yeah, the Rule of 40, it's kind of a quick health check for software as a service companies primarily. It basically adds together the company's revenue growth rate and its profit margin, or sometimes free cash flow margin. The idea is a score of 40% or higher shows a good balance. It means the company isn't just growing fast, but it's also profitable, or at least on a clear path to profitability. It shows sustainability.
So growth isn't coming at any cost.
Exactly. And with a score of 83%, well, Palantir is way past that 40% benchmark. It shows they've really excelled here. They're growing rapidly and doing it efficiently, profitably. That's a powerful sign of underlying strength.
Right. So let's bring it all back then to your initial point. While some analysts out there are forecasting a pretty significant drop, our deep dive into the sources you brought suggests that, Palantir's strong demand, its innovative AIP platform, that impressive revenue growth, both government and especially commercial, plus those strong financials like the Rule of 40 score, they all provide some pretty solid reasons for optimism, right? And these factors, as laid out in the material, could potentially buffer against those big short-term drops that some are predicting.
Absolutely. And this really brings up an important question for you, the listener, to think about. When you're evaluating a company, looking at its future, how much weight do you give to those short-term market forecasts versus, say, the underlying strength of its actual innovation, the real demand for its core product, especially when it's operating in a sector like AI that's just expanding so rapidly? According to the sources we looked at today, whatever the stock does in the very near term, maybe up, maybe down, there seems to be a solid case for optimism about Palantir advancing over the long term, which suggests that, even buying at today's arguably high price, you could still potentially see a win down the road. Something to consider.